down to the cellar and have a drink.
Okay. With a federal election expected to be called within the next 12 months and Labor proposing some controversial reforms to negative gearing and the capital gains tax discount, a report has just been released this week assessing the risks of implementing these changes uniformly around Australia. The report suggests that some segments of our property market could be detrimentally impacted, with prices falling over 10%. So to discuss the findings of this report and have a chat with leading property commentator Michael Yardney. He's the CEO of Metropole Property Strategists. Good afternoon to you, Michael. Great to see you once again. Look, there are predictions that house prices could fall by as much as 10% in Sydney and Melbourne without any help from changes to negative gearing. So what do you make of the report released this week?
Well, the initial proposals by Labor came out before the previous election, and the market was very different then. So you're right, Sophie, we are already having a tough time. Any further battering to segments of the property market will affect the value of your house and mine, as well as the investors this was initially targeted to. So the proposal from Labor was to affect negative gearing for any new investor. So anyone who was to buy a property after Labor came into power or after the next election, is still the proposal, it's still their proposed tax laws, would only get negative gearing benefits on new properties, not established properties, and any investor selling their home, because you don't get capital gains tax selling your own personal home, but any investor selling their property would get less benefit from the capital gains tax benefits would be halved. And that could impact our property markets, as you suggested.
Now, what do you think is the reason why Labor's been doing this, and what was the reason why they wanted to, you know, is it just to have, well, that side says this, so I'm going to say that, leading into an election?
James, you're very cynical. They wouldn't
Don't
do
say
that, would they? So, they gave three reasons for it. Number one, they wanted to make new homes more affordable for first home buyers, and they were suggesting that first home buyers were being eased out of the market by ugly, greedy property investors. Now, that's my words, not theirs, but that was the implication. The second was to actually put some more money into the coffers of the government, and also to improve housing affordability. But again, that was at a time when the markets were booming, and as Sophie correctly said, the markets are already a little bit different, James.
Yeah, look, we're definitely watching that on the show. We had you know, a few auctions passed in last week, and we sort of had a 50-50 day today so far, just so that people who are watching understand a little bit more, because it's a term that we use that people don't necessarily know. What exactly is negative gearing, and why is it a good thing for a property investor?
Good question, James. So this applies to investors, not to home buyers. But if you buy an investment and you borrow against it, the cost of your mortgage and the rates and the taxes and the outgoings will often amount to more than the rent you come in, so you're actually losing money each month. Why would an investor do that? They'd do that because they hope in the medium to long term the value of the property would go up. And if your property goes up $70,000, $80,000 a year, as they did in the booming times in Melbourne and Sydney, you're prepared to lose $15,000, $20,000 in cash flow, because in the long term you're ahead. So it's like any other business. If you were to buy a shop for the first couple of years, you probably wouldn't make much money. You'd be prepared to lose a little bit so that you move forward. So this is available for any other business owner, but the government was suggesting they're going to change the rules for investors.
So how many people does this impact? So how many people do use negative gearing as an investment strategy?
Sure. Well, according to the Tax Department, there are 2 million property investors in Australia, and around 60% of them are negatively geared. On their tax returns, they show that they're negatively geared. That's about 1.28 million investors. Having said that, some of those who are no longer negatively geared bought their properties 5, 10, 15 years ago, and the value of the property's gone up, the rental's gone up. But almost all new property investors, considering the size of the mortgage they've got to get and the lowest yields you get, almost all new property investors are negatively geared to start with, Sophie.
Yeah, look, if they do this, Michael, and it's going to affect the market, is there parts of the market that are going to be affected more than others? Like, are there different areas around the CBD or the cities or the fringes around the country that are going to be targeted more?
Yes, well, this report was done by a company called Riskwise Property. It wasn't a political statement, it was an independent assessment of how all the local government areas around Australia would be affected, and some will definitely be affected more than others, especially those that are already suffering a little bit, and they were suggesting that Darwin and Townsville and Perth are amongst the areas that are going to be most affected, and in general apartments, or units as they call them, will be affected more than houses, because again it's going to be investors who are buying properties are going to select certain areas and now steer clear of other areas. The suggestion was it could affect our markets as much as a 1.5% interest rate rise, and you and I know what that would do to our pockets if that happened. And so the thoughts was even Sydney and Melbourne, apartments, houses would also drop, but apartments could easily drop up to 10%. Now, the intention of this, of course, was to help first owners get into the market, and also the intention was to make housing more affordable. But there are unintended consequences from this, especially now that our markets are not as buoyant. Because if the value of your and my property drops in value over time, people become a little bit more nervous, and there are economic flow-ons as well. We really don't want houses to decrease in value. Yes, we want to help first homeowners get into the market. There's no doubt that that's a good aim, but it's not necessarily by making properties cheaper, because if properties become cheaper, then people become a bit nervous, they don't spend as much, and we've seen the effects of falling property prices overseas, James. In my opinion, to get people into the property market, rather than dropping the value of the houses. Remember, 70% of Australians own their own home or are paying it off. There's only 15% of the population who are new home buyers trying to get in, so don't disadvantage the vast majority for the new people. Because remember, when they buy their new property, they're not going to want the market to go further down, they're going to want it to go up again. So why not help people by having better productivity, getting more wages, making properties more affordable to them because they've got more money, rather than making your and my house cheaper, James?
Well, I don't know why somebody else hasn't thought of that already. Michael
I'm not a politician.
No.
Perhaps you should be. Thank you so much for your time today. Always great to have your insights and your very good explanations on things that might have otherwise been difficult to understand. Thanks once again, Michael. See you soon.
My pleasure. We have to watch that as the election looms, aren't we? We're going to have to see where things go. It has a big impact on the real estate market.
Certainly does. Right, an incredible Hamptons-inspired estate with a private beach has hit the market at a whopping $9.5 million. This is 1A Yacht Street in Southport, Queensland. And we were joined on the phone earlier by homeowner Julie Matthews to tell us all about the luxurious property.